Dukascopy TV, I'm Elaine Stenson and I'm joined in the studio now by Jean-François Owczarczak, Director with Management Joint Trust and Fingraphs.com. He's here with me now for a look at the dollar pairs. Jean-François, a very quiet week so far.
Hi Elaine, yes, a very quiet week and not much happened in the end last week, even if we had Jackson Hole, etc. So we're going to have a look at the main currency pairs. We're also going to integrate the S&P futures and the 30-year Treasury bond futures. And for that purpose, although we start here on the Dukascopy's directory, we've created a private selection, which is called A for Dukas, where you basically have the currency pairs, which are sourced from Dukascopy, and the US dollar 3-month futures for the S&P 500, as well as the 30-year bond Treasury bond futures, which are sourced from our usual FinGraph sources.
So we'll start with the Aussie dollar.
Well, we're going to have a look at the mosaic, and I probably wanted to go in reverse this time.
Oh,
so
makes things interesting.
Yeah, try to bring a bit more action, because not much has happened on currencies.
No, do you think it's the time of year that affects?
It could be the time of year. It's also that there's a lot of uncertainty of what's going to happen with a tapering and the different politics of the central banks. Yeah. Also, the economic picture is not very clear yet. A lot of people are waiting for a confirmation that initial growth could be sustained. So there's a lot of interrogations out there, and it's basically keeping currencies in a range.
Okay.
Well, I'm probably going to start with the S&P Treasury, the S&P future and the Treasury future. These are weekly charts, so quite long-term charts. And what we could see here is that on Treasury bonds, we have been looking at quite a strong correction since the beginning of the year. Now, if we look at the investor's view is a weekly chart, a daily chart, and the hourly chart. And we could see it here that all three on 30-year Treasuries are in a bear market. A bear market on the weekly, which has not turned impulsive yet. We're still within what could be a correction. Bear market on the daily, probably which has gone impulsive, probably getting towards an intermediate bottom. And on the hourly, the potential has pretty much been done over the short term. Okay. So basically here after, well, you often say buy the rumor, sell the news. In this case, is sell the rumor, buy the news. And basically, it seems like a tapering seems to be a given event. Now, after a few weeks of uncertainty, treasuries were well sold off. Now that it seems to be clearer that we're going to have a bit of tapering, the news is out, and we could probably start to see a rebound on treasuries here.
Did the markets react very soon after the minutes of the Federal Reserve meeting were released?
Well, we're mostly talking about stabilization here.
Yeah. And
this stabilization would probably need a bit more of a move to really start creating a corrective move up on the hourlies, and then lead us into a stronger correction up on the dailies. What we're seeing here is nothing major, maybe a few weeks up, but a few weeks up, which might bring some relief to the S&P 500, and maybe, as it seems like, given that there was a large sell-off in bonds because of all these discussions, a lot of flows have gone to Europe and invested in the Eurozone. So we might see a slight reversal of that. We think that it's only a correction up, so this phenomenon should be a temporary, probably lasting a few weeks.
Okay.
And so if we zoom out, go back to the S&P. Well, the S&P, also in an investor's view here, the market has been now going up since 2009. Basically, a lot of people have been calling tops this summer. From what we could see on FinGraphs, and we do trend analysis, that means we tend to mostly follow trends and wait till a reversal point is confirmed. But we are still in an uptrend on the weeklies, and an uptrend which could probably last a few more quarters and probably has a bit more to go. On the dailies, although we did a nice intermediate top here in July, we're still positioned in an uptrend. And on the hourlies, this reaction up is trying to turn impulsive. That means if it was going to go back above a 1670, you might see a resummance of the longer term trends, and hence on the dailies and the weeklies. And so we think this whole move up on the weeklies is not quite over yet. We're probably targeting it for the end of the third quarter, early the fourth. And so a rate which could see a bit of reversing the upward trend could give a bit of relief to equity markets, and we could probably see a new rally. Now, if we lead into currencies based on that, well, what we see here, first of all, with dollar yen, that the Japanese central bank has been quite or very has accommodated very much since late last year. That has helped.
Do you think Abenomics has affected this?
Yeah, well, that's what it is.
Yeah.
And so, and you've had quite a nice reaction on the Japanese stock market, and as a result of that. But we do think this trend is not over, and that would sink in with what we said on the S&P future. As on the dollar yen, we still see a few quarters up, and probably a target towards 110.
Okay.
Now, we've seen over the last few months a very lateral shallow correction that has not been able to turn the trend down, and we think it might be in a position to resume its uptrend after now what is about a 3 months correction. And last week we went through our corrective targets here, and so on the hourly it seems like the trend up has been confirmed. We look at impulsive targets here which could lead us over the next week or so between 155 and 101.99, which means that this move to resume the uptrend seems to be materializing.
Okay.
Now
Swiss.
I'd like to turn to the more difficult ones because they've been quite flat, and that's basically dollar Swiss. It's pretty much the same as euro dollar in reverse. What we could see here on both is that you have a bull market but no targets, which means the targets are not in accordance with our trend analysis. And similarly, a bear market here on dollar Swiss with no targets either, which means there's also a discrepancy here. In general, that means that the trend is not very strong, and so we're pretty much in sideways on the weekly charts of both these pairs. What we can see if we switch to dollar Swiss is that, well, sideways on the weekly, a downtrend on the daily, and we've been working through, so if we only follow the trends here, it's quite aggressively down, and could lead into lower levels over the next 2 months. But before that could happen, you really have to break through these levels here, which have held all year. And I think just in the region of 91 here at the levels we saw early February. So we have been mildly positive on the US dollar. That has been quite a large setback over the last few months. We would really need to see these levels being taken out to the downside to confirm that we're in a long-term bear market on dollar Swiss.
Okay.
We believe that the exaggeration that you're starting to see here on the hourly could fuel a correction up and could help the dollar regain some strength over the next few weeks. Now, if we look at gold, well, for gold, we're still in a long-term downtrend. We saw quite a lot of exaggerations here back in June or end of June. We believe it's still an intermediate bottom, so that means that following a correction up, we should see a resummance of the downtrend towards the end of the year. On the daily, we're still heading down. The current move is just a counter-trend move. It hasn't been even strong enough to turn our envelopes. And this counter-trend move is slowly coming towards a strong resistance areas as we are reaching the upper bands of our impulsive targets up. So all this move up would be in accordance with what could be a first leg of correction up.
Okay.
What we would expect now is probably a consolidation over a few weeks, a new attempt, probably not making it as high as the one we just did, and then rolling back down towards the weekly targets here. Then quickly, pound sterling is, or the cable, sorry.
Yeah.
Here what we see is that we're in a downtrend on the weeklies, a correction up on the dailies.
Yeah.
We really need to make it above 157 to create anything bigger. So that's so the strong resistance here at this point. And as you can see, there's probably a bit more to go on the hourlies, but we're also getting towards levels where this leg up might be coming to a saturation point.
Okay.
And then euro dollar, we just discussed. as the reverse of a dollar Swiss. But what you can see here, pretty much an early uptrend, pretty much a sideways on the weeklies. Quite an aggressive uptrend on the dailies, but bear in mind we're slowly getting into risk levels here. So although it's not our preferred scenario, we tend to use fin graphs to follow the trends. So we would be prudently still bullish on euro dollar, but you're also getting towards saturation points on the hourly. Maybe it's worth going towards the trader's view, which is the shorter term outlook over the next week or so. And we can see that it's probably another day or so to go, but you really need to watch, as we are in the saturation zone, that we don't break down on the shorter term on the shorter term time frames. And for example, the 15 minutes here would move impulsive below 33.55. It seems like we're not very far from it. So it's a dangerous area. And although we can be negative because the dailies are still in an uptrend, we are quite careful on euro dollar. Finally, Australian dollar, the Aussie, well, still in a downtrend on the weekly, quite similar to gold. Trying to do an uptrend, or at least attempting a correction up, quite oversold on the daily, but it hasn't given much. Well, the reaction hasn't been very strong, so that usually is a sign of weakness.
Okay.
And it's already resuming the downtrend on the hourly. So we think the trend on the LC is still down, and that the correction may be behind us.
Jean-François, thank you very much for joining us.
Thank you, Elaine, for having me.
And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.